It's getting hard to ignore Bitcoin.
The price of a single Bitcoin has climbed above $100,000 for the first time.
This is historic for the crypto space.
The United States will be the crypto capital of the planet and the Bitcoin superpower of the world.
In December 2024, Bitcoin's market cap surpassed $2 trillion, making it one of the largest investment assets. And if you've been watching from the sidelines, you might not know what to make of it all.
Your first investment in Bitcoin or any cryptocurrency, you need to go in it with a mindset of buy and learn. Just buying it because you think it's a speculative investment is a mistake.
Some other people say it could be a store of value, just like gold. But so far as we know, Bitcoin has been trading as a very volatile asset.
So what role should Bitcoin have in your portfolio? And how could the new administration broaden its adoption and push its price up?
So Bitcoin is a decentralized digital currency. A lot of people call it cryptocurrency. Compared with a lot of traditional assets or traditional currencies, it doesn't really have a centralized administrator. Instead, it's based on a peer-to-peer network.
The peer-to-peer network that powers Bitcoin is called a blockchain. It allows users to digitally share resources without the need for a central server. Governments or banks don't control Bitcoin. Instead, it's secured and maintained by miners worldwide. This makes it a decentralized network, allowing users to manage their Bitcoin directly.
Bitcoin was designed so that you would be your own bank. That stuff's hard. People are afraid of it. They're scared, right? So they want a trusted third party.
Enter the crypto exchanges like Coinbase. They lowered the entry barrier, but they also garnered attention from the SEC. Many in the crypto community believe that current securities laws don't fit crypto, as it's different from traditional assets like stocks.
The last administration really regulated by enforcement. They didn't tell the rules, they just decided what they did and didn't like, and then would send subpoenas, right? So that's a very difficult environment to work in.
But SEC Chair Gary Gensler disagrees that there aren't rules.
Not liking the rules is not the same as that there aren't rules.
The SEC said a lot of crypto companies, such as crypto exchanges, are actually security exchanges without registration because they allow the trading or support the usage of a lot of cryptocurrencies where the SEC deemed as securities.
Now, it's important to note that Gensler stated that Bitcoin specifically isn't a security, but other cryptocurrencies could be treated as such. Still, the regulatory confusion around crypto in general and how it's taxed, combined with concerns about its environmental impact and use in illicit activities, kept some investors at bay. Leaders of traditional finance weren't endorsing crypto either.
Don't your clients want crypto exposure?
No, I don't believe any client has sought out crypto exposure.
That was Larry Fink in 2018. 6 years later, his views on Bitcoin have changed.
I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong.
In January 2024, crypto companies and traditional financial institutions like BlackRock and VanEck launched their spot Bitcoin ETFs.
The Bitcoin ETFs have caused mass adoption, right? Because now people can invest in it easily in a place where they trust.
Bitcoin's price rallied with the introduction of spot Bitcoin ETFs. And that other rally later on, that's when Donald Trump won the presidential election. And it sparked enthusiasm in the crypto industry for several reasons. One is the promise of a better regulatory framework.
Paul Atkins is actually known to be friendly to the crypto industry. One thing people are expecting is that the SEC might eventually drop some of its charges against some crypto companies, such as the one that's ongoing with Ripple, and there's another one with Coinbase.
Another reason for Bitcoin's rally is Trump's promise of a strategic Bitcoin reserve.
Trump had mentioned that he wanted to create a strategic Bitcoin reserve in the US. He didn't talk about a lot of details, but maybe that would involve not selling the Bitcoin the US government has seized from illicit activities. Or furthermore, the US government might actually purchase Bitcoin to add to the Fed's balance sheet. That could significantly boost Bitcoin's price if it becomes a reality.
Bitcoin, which started out as an asset that rebelled against governments and traditional finance institutions, is now potentially embraced by both. But what does that mean for your portfolio?
Some Bitcoin bulls said the cryptocurrency is like digital gold, but not everyone agrees. Compared with gold, Bitcoin is much more volatile, but over the years, it has generated greater returns. Bitcoin is actually moving in tandem much more with stocks, especially tech stocks, over the years. Some portfolio managers said there might be a case to add both Bitcoin and gold into your portfolio in 2025, just because both assets has posted impressive rally.
Next comes the question of how much Bitcoin to hold, if any.
Critics such as Warren Buffett has said that Bitcoin doesn't really have any intrinsic value. Its price was mostly based on people's faith. So in the extreme scenario, Bitcoin's value could go to zero. That's why some portfolio managers said, don't put the money you can't afford losing into Bitcoin.
I've seen asset managers like Bitwise make the argument for 5% allocation. BlackRock just came out with a report suggesting a 1% to 2% allocation. You also have on Wall Street the holdouts, and they don't allow the purchase of these ETFs on their platform. I don't think that can stick. There will be investor demand, the adoption continues, and it certainly helps when the number continues to go up.